a trading mistake that costs me a condominium. In this three-part series, I'm going to share some of the lessons learned from the stock market in the last 3 years that I would never forget. In this video, I'm going to share a critical trading mistake that costs me a condominium in the 2021 to 2022 period. To put it simply, this slip-up occurs because I don't know how to sell high when I was up ahead, and only to see all the profits disappeared into thin air and found myself in a deep hole that seems almost impossible to climb out. I hope by recounting this mistake it can help you and myself avoid it in the future. I had 20 years of stock trading experiences but only started trading in the US market since the 2020. I was really drawn to the US market because of its high risk and high reward nature, and I loved trading high growth tech stocks because of potential returns, and my own profession is also in the tech industry. As anybody who trades in the US stock market knows, from the COVID crash low in March 2020, the market went on one of the most bullish runs the rest of 2020 and throughout almost the entire 2021. The market was like an ATM machine, and it seemed as if any growth stock would just keep going up. To the moon, as the traders would call it. I recalled a financial analyst talking on TV about what a great stock and company Upstart was, as that stock went 10x in 2021. But when the program host asked him what Upstart does, he couldn't give a coherent answer. I joined the frenzy and bought many shares of Upstart, and only regretted not buying more as the stock just kept going up every day. And it was not just Upstart, it was the same case for many growth stocks like DigitalOcean, Digital Turbine, Roku, Shopify, Bandwidth, and Arc, to name a few that I've bought and still own to this date, though many of them were in the red still because of the fatal mistake I made. In the second half of 2022, the market was definitely in a very complacent stage, and there was lots of euphoria and FOMO sentiment in the market. As I saw my gain grew larger and larger, I was becoming quite greedy. I started in the market with $1 million worth of equities, and in Q4 2022, I saw my overall account grew to about 1.6 to 1.7 millions. I had my goal set on doubling my investment and thought about the day I could quit my day job when it reached 2 millions. But starting around December 2022, things started to change, as increasingly there were more red days than black days, and the market became very volatile. My gains started to decrease, and by then I had over 30 different stocks, and it was hard to stay on top of all of them, as one after the other, they all seemed to start toppling over. Going into 2022, the selling accelerated, but I was still bent on recovering my losses somehow, pouring in more capitals so I could lower the average price of my stocks. Overall speaking, I was still profitable, but the gain was dwindling from the peak 700K down to 500K to 300K, and eventually by around March and April I was down to almost my starting capital position. I was devastated because I couldn't get over the fact that only a few months ago I was so close to my goal of 2 millions and now it's gone. Yet I still had not come to the realization that I needed to preserve my capital. So as the bear went on a tear, my overall value continued to decline. And with my portfolio full of high-growth stocks by January 2023, I was down to 500K, less than half what I initially started, and less than a third of the peak value. I was so distressed because of this. I recalled the thought I had about taking profit when I was at the peak, and used the 700K profit to pay for my condo's mortgage. But it was a fleeting thought, and I never executed on it. And I felt like getting gut punched. My number one critical mistake is I didn't know when to sell high, even though part of me was aware of its importance and benefit. That's why I said this mistake cost me a condo, which eventually I had to sell, instead of owning it without any mortgages. The market eventually bottomed and started to rebound in 2023, but almost my entire list of growth stocks were in the red. Never in my wildest thought I could have imagined how volatile the tech growth stocks are. Here is how much the few growth stocks I named earlier dropped from peak to bottom. DigitalOcean, down 86%, Digital Turbine, down 96%, Roku, down 92%, Shopify, down 86%, Arc, down 81%, and Upstart, down 97% to its low of around 12.5. Shocking. Though my overall loss has started to narrow as the overall market advances throughout 2023, I still find myself constantly kicking myself in the butt for not having the wisdom and will to sell high when I had the chance. Partly it was due to the lack of analysis tool I have since then developed to help myself navigate the stock market. With the suite of macro trend indicators I have developed, driven out of a strong desire to understand the inner workings, ebbs, and flows of the stock market, I now have a great tool to help me identify the market bottoms and tops. I am much more confident that with this tool, I can make sound trading decisions to buy low and sell high, not in the small cycles but amidst the major cycles, finding the major bottoms and major tops. Let me show you an example how this tool can help. Go to the macrotradings.com website and members area, find the trends section. Here you can see many trading approaches like finding major bottoms and tops, the associated indicators to use, and the recommended common sense trading strategies. Let's take a look at the 3 indicators which can help to identify the major tops. The first one, RSI divergence and negative sentiment. Let's click on it. This indicator can find spots where the S&P 500 or a SPY ETF have an RSI divergence with the index or ETF value, followed by a sentiment shift to the negative. Very often this occurs before a major market top, as we can see in Nov 2022, and also in March 2020, just before the market crashes began. Let's take a look at the second indicator, equity put-to-call ratio, which measures the amount of equity puts to the amount of equity calls, a proxy of the retail trader's overall sentiment. When the ratio is high, it means there are lots of puts and fewer calls, indicating an overall bearish sentiment. On the contrary, when the ratio is low, it means there are lots of calls and fewer puts, indicating an overall bullish sentiment. However, it's a contrarian indicator because when the herd is fearful, it usually means the bottom is near, and when the herd is greedy, it usually means the top is near. On this chart, we can see an inflection of the ratio value turning from downward to upward direction occurs at every major or minor top. It can be used as another guiding signal to detect the market tops. Now lastly, let's look at the signal breadth deterioration, which looks at the percentage of stocks above the 200-day moving average of the S&P 500. Every top before a bear market materialize will be accompanied by a decline of this value as more and more stocks in the market drop below their 200-day moving average. For example, in the second half of 2021, when the bull market was still in full force, the percentage of stocks above the 200-day SMA was actually on a continuously decline. A clear warning signal to be extra cautious. Reflecting the mindset I had during that period, I was still pouring more capital into the market to chase the growth stocks. Pure stupidity in hindsight. You can also observe for a closely related indicator about the percentage of stock above the 50-day SMA. Although it was going up and down throughout this period, the overall trend was still going down, confirming that Wall Street was rotating money to brace for the bear market impact. So there you have it. This is the painful lesson I've learned about not able to sell high in the stock market. Though as simple as it may sound, it was actually very hard to execute when all the news around you is exuberant and stocks to the moon. However, I now have a great tool at my disposal to help me filter out the noises and see what's really going on behind the curtain. If you are interested in leveraging this too, please sign up for the membership at macrotradings.com and you will have this full suite of powerful indicators to assist with your trading. Stay tuned for my next video where I will deep dive into my second fatal mistake and how other indicators could have saved me from my mistake. Thanks for watching.